And we are live on Smart Money Culture TV in Texas and Louisiana, as well as around the world, streaming on X, YouTube, and other platforms. We have a lot going on today. Impact money, Fed punts, the markets rise, the war heats up, Trump is an NYC standoff, AI is alive, RFK Jr. takes aim at the CIA and the FBI and the Fed. And this is really no joke, what we have going on here. So we're going to start off. We have missiles that are hitting Kiev, and that is no fun, but I'll share that. And we did just, let's see here. Boom. Okay. Let me get to have this screen. Share screen. There we go. They say that they've stopped most of these, or all of them. So of course, it appears that the missiles were able to be taken out. Now, as this is happening, we have as well what is going on. Hezbollah is enforcing the capital of Lebanon. And, it's just like RFK Jr. says, and I'm not a big fan of RFK Jr., but I'll tell you what, I'm going to play a clip. He is saying the right things. I'll tell you that. Hezbollah reinforces Beirut stronghold. They are reportedly deporting unprecedented numbers of forces in the Dahai district of Lebanon's capital. The reason is unclear. However, they may be expecting Israel to intensify their attacks after deadlines for negotiation has expired. Of course, yeah, that's pretty spot on there. Now, real quick, I just wanted to play this clip. This is from RFK Jr., and I'm not endorsing RFK Jr. or anything like that, but this is pretty interesting. Shoot, somehow I lost it. All right, well, let's look at this real quick. This is talking about the U.S.-led NATO expansion and really what it's doing here. And I'll pull up that other clip.
What is your view of Vladimir Putin?
Well, I think he's very smart, very tough, and I think he says what he means. In 2007, he said, "Don't do this," at the Munich Security Conference famously. He said, all right, you went violating what I know to be true, by the way, which was not an inch eastward for NATO, promised by James Baker III and by Hans-Dietrich Genscher to Gorbachev in 1990. I know that's for sure the case. The United States expanded NATO to Poland, Hungary, Czech Republic, and in the Clinton period, and then to 7 more countries in 2004, Latvia, Lithuania, Estonia, Slovakia, Slovenia, Romania, and Bulgaria. And then in 2007, Putin said, stop. All right, stop. No more, not to Ukraine. So what does George W. do in 2008 in Bucharest? Of course, what does he do? He says, guarantee Ukraine and Georgia. And, this is Palmerston's playbook from 1853. So we're going to surround Russia in the Black Sea again. Exactly that.
Okay, but I don't want to interrupt, but just to interrupt, though, I just asked you what your view of Putin is. And so far, you've just said he's smart and tough. I
told you. He warned us very clearly.
Any negatives, Professor?
We might play some more of that a bit later, but I don't need to hear his kind of rant on everything. This is pretty interesting. This is more interesting of what is actually going on in the world. RFK Jr. here.
There's no sound.
Huh?
There's no sound for us.
I see. Sound was stuck on the other one. Hold on 1 second here. I can fix this real quick. That was interesting. A little bug in the code. All right, here we go. This is he's taking aim at the CIA, the FBI, the Fed, the money printing, everything. This is pretty interesting. This is stuff that got his father.
And if you look at the CIA is a sock puppet for the military industrial complex. Its function is to provide a steady pipeline of forever wars for Raytheon and General Dynamics and Northrop Grumman and Boeing and Lockheed. That's who it's working for. It's not working for the American public. My uncle understood that in 1961 when he came into power, 4 months in during the Bay of Pigs, when he realized he'd been lied to by his agency and by the military brass. He said publicly he took blame for it, but privately he said to his aides, I want to take the CIA and shatter it into 1,000 pieces and scatter it to the winds. But also the Fed is a captive agency by the banking industry. Jamie Dimon and Larry Fink run the Fed. It's not working for you and me. It's working to flood the canyons of Wall Street with money. That's much more concerning to me than the agency. The agencies have too much power because they're owned by the industry. The agency didn't have too much power when it was working for the American public. But they don't do that. The health agencies are not working for public health. They're working to keep us sick because the group that controls them, the pharmaceutical industry, profits from chronic disease. Now, $4.3 trillion a year we're spending on chronic disease, and nobody's even doing research on it at NIH. So that's a big problem. The pharmaceutical industry, the oil industry, the coal industry, the chemical industry, which I've seen firsthand throughout my career. You know, each of their agencies are captured. They become sock puppets for the industry they're supposed to regulate. All of these agencies are controlled by an industry, and I think that is the biggest threat to American democracy.
So, like I said, I'm not endorsing the guy. I do think that if Trump picked him as his vice president, it would break the world. There's a lot of stuff I disagree with him on. I think he's scary. He has a very scary stance on gun control and stuff like that. Let's look at the markets. Matt Dixon, Sir Matt, how are you?
I'm good, thank you. Good morning. How are you doing? Well, I can see you're having a few little glitches, but that's to be expected, isn't it? You're bringing some amazing news to our ears. It's quite worrying, to be honest, all that's going on. I was just looking up something about sleepwalking into war. Just came to mind watching all these videos you're putting up there, and I think that's actually what's happening. All this news is going on. It's good that you're bringing it to our attention, because I do actually think we are, particularly in the Middle East, but you can see what's still going on with Russia and all those videos you put up there. They're absolutely right. I mean, to be fair, they're absolutely bang on. So we do need to be aware of what's happening. I do my best looking at the charts, but we're driven by fundamentals. As you know, there's people in power driving interest rates, driving the bigger narrative, and we just have to try our best to be aware of what's going on. So
that is absolutely correct. It's crazy. It is absolutely crazy times. And you said it well, and I don't know if you got that from somebody else, but sleepwalking into war, sleepwalking into World War III, and that's really, it's kind of what happens. It's kind of what's happening. People are, they're so involved in with their little life it's not a little life for everybody. It's a big life for everybody, right? It's your life, and it's hard to focus on the fact that, there's 50,000 or 40 or tens of thousands of dead over in Israel area there, as well as hundreds of thousands in Eastern Europe, and then China. We're poking China too. I feel like.
Yeah. So this sleepwalking into war, it first came about, I think, in 1914, where again you're kind of watching events happening, and it's just gradually moving towards war. It's been used over and over again, and I think it was recently used about this war with Russia. About it did come from a guy called Clark Christopher, I think, where it originally came from, 1914. But the most recent stuff is talking about sleepwalking into war with Russia here. So, and the starting point, the sort of where they light the touch paper, could be the Middle East. We're seeing this news with Lebanon. It really is quite worrying because there's big interest in the Middle East. You've got Russia, and Russia have got big interests. They've got bases in Syria. You've got Iran with all the proxies. You've got Syria. You've even got Yemen with the Houthis in Yemen. You've got Lebanon with the guys there. So all around, and that is probably going to be the next sort of where the next war starts. But it could actually go a lot wider than this. So it's worrying, and you can actually see the symptoms of this in the financial markets. But at the moment, they're just ignoring it. But
Yes.
At some point, as I say, so I'm just going to share my screen and just jump into a few charts because obviously we had the Fed meeting yesterday.
Yes. Which I didn't actually watch it. I just saw all the effects. I mean, we kind of knew what was going to happen. Did you actually watch it to see how hawkish or dovish he was?
Yeah. So what I thought was interesting was the markets before that had a pullback, and I was saying yesterday, I think it's just a pullback.
Yeah.
And people need to get to understand really that these pullbacks are just normal. If you want the gains that you're going to get from a volatile asset like Bitcoin, you're going to have to suffer the pullbacks as well. And the pullback we had so far was 15%. That's the recent pullback in Bitcoin.
Well, and I wanted to say this, I didn't mean to jump in again, but it would be interesting if that was the pullback. So when I said that 38 or 40% to 20%, so during this period before the halving 8 years ago or 9 years ago, there was a 38% pullback. And then the last halving, there was a 20% pullback. So it would be interesting if this was as big as pullback as we got, because it would look as we were starting to have a trend of smaller pullbacks.
Yeah, you can actually see back in 2020, the last halving back then, you can see the big pullback that we had. It was very, very substantial. So you can see these pullbacks I've got charted here just to show the 15% so far. Maybe it'll go more. It's entirely possible with this halving coming up. But you can see that 15% is actually inconsequential compared with the usual pullbacks you get within the bull markets. So we could very well still be within a bull market for Bitcoin, but you've got
even
to
if we go much further, really.
Yeah, you've still got to be able to stomach the pullbacks, though. So trading, there's never any certainty, but I'm just saying that you can't conclude. I had people writing to me yesterday saying the bull market's over, it's all over. Well, we definitely can't conclude that yet. It's premature to say that. And a pullback was to be expected. You can see the recent sharp movement upward in Bitcoin there. And the tiny little pullback, when you put it into context, it's absolutely nothing, really, virtually nothing at all. So this was the big news yesterday. The Fed Chair Jerome Powell. Obviously, we fully expected rates to stay on hold. I think it was about 97% nailed on that rates were going to stay on hold. That's exactly what happened. I did listen to his speech and to his questioning. And he's basically, it's a bit strange because they are doing monetary tightening already at the moment because they are actually scaling back bond purchases, and yet at the same time they're leaving rates. They're not lowering rates at the moment, but they said they're going to be lowering rates probably at least 3 more times this year.
0.75 basis points, right? He's promised by the end of the year.
Yeah, so that's telling us, if you ask me, they are worried about the economy, and we've got inflation way higher than it's expected. And the guy from CNBC, I can't remember his name right now, but he asked a question about inflation. Are they not concerned about the rising inflation. And basically, he kind of said, no, with inflation is coming under control. And yet we saw inflation rising more than expected at the last CPI, when the last CPI was announced. So it may be, but remember, inflation this time round was driven by external forces, and it was actually driven by the war with Ukraine-Russia. We're actually probably still overall in a deflationary environment, and that's why they printed money like crazy to try and tackle that, starting in 2008, and then obviously the COVID crisis. And as I've said over and over again, this printing money doesn't produce real productivity, lasting productivity. It just piles money into risk assets and pushes them higher. And we're at all-time highs with virtually everything. So it just shows us that the money has not gone towards good purposes. It's just gone to make rich people richer. And the poor people aren't really involved in this massive asset price appreciation. So they've not really benefited. But they are suffering from the inflation that's taking place. And we're seeing unemployment at all-time lows, but as we've said before, this is the time when this will potentially turn around, and this is why the Fed are saying they're looking now at doing 75 basis point easing throughout this year, and that's just, and they're saying that whilst inflation is way above target, and inflation increased on the last read. So they really are trying to walk a tightrope, but I think it's very, very shaky for them because, there's the very, very conflicted. They have to be conflicted with the fact that they've got inflationary troubles and yet they've got growth troubles. And then behind the scenes, not even, this sleepwalking narrative we're talking about, sleepwalking into war, that is happening behind the scenes. And when I said that inflation was driven by external forces, just imagine if war kicked off in the Middle East, which I've said, and I said right from the beginning of these shows, I think April is the time it's going to kick off, and it looks as though it's sleepwalking towards that. Then if that does happen, then we're going to get massive external drive higher with inflation, because fuel prices will go through the roof. And we will look at, in fact, we might as well flip over to the charts right now and just see where we are with some of these things. So we'll just look at DXY first of all. I'll put it on the daily to start with. The reason I put daily is you can see what happened yesterday with this big red candle here. I trust you can see that red candle there. So that was what happened.
Hard to miss that one.
That's what happened when the Fed basically kept rates on hold, but it wasn't really that, because we all knew that was going to happen. So that didn't really affect anything. It was the commentary that went with it, and then basically saying they're going to be lowering rates 3 times still. And they're running out of time. They say they're probably not going to lower rates next time round either. So,
yeah, well, that's what I was thinking. I'm like, how are you going to do that? I don't, and he's just going to promise. I think, well, who knows? But yeah, it's all lip service. It sounds like to me.
Yeah, I mean, they only meet about every 6 weeks, so they are running out of time. So they're going to be doing a lot of rate reductions later this year, which tells me they are genuinely thinking the economy is going to slow down. And that's what I've been saying in previous shows over and over. All the indications are that we're heading to recession later this year. And I think that's going to start to really begin to bite, from mid-year, somewhere around mid-year. So that's why they know what's happening behind the scenes. They are going to be lowering rates, and they're lowering rates. They will be lowering rates quite aggressively, I think. And they're going to reverse the QT and go back to QE, printing money again, because they need to try and keep things afloat. They've got an election coming up. They want things to be looking good, even if they're not. So they're going to plaster over the cracks for the time being. The cracks with inflation, the cracks with growth, etc. Plaster over it, just print a load of money, make things look good. Once the election's out of the way, then the next person is going to have to deal with the problems. So that's the kind of...
We're looking at they're going to have to pull that money in somehow. They're going to do it by interest rates, or they're going to collapse the commodities. We've all seen them do that before. They just collapse the commodities and they remove the money out of the circulation that way too.
Yeah, so we'll see what happens with today's candle. You can never tell partway through a candle. We did push higher a bit with the dollar earlier on. It's actually already heading down a little bit. So we'll see.
I'm wondering if the market continues down a bit and this is just a little
Well, what I've just put on is the weekly on the DXY, the dollar index. So looking at the weekly, I'll move this Fibonacci thing out of the way just to make it a bit clearer. You can see here we have basically a doji. They actually call this a gravestone doji. So it spiked very much higher, it spiked a little bit lower, and at the moment it's in the middle. Now we can't say for sure this is how it will finish because this is a weekly candlestick, but we're near the end of the week. So if it finishes here, this is a reasonably strong sign of a potential reversal to the downside in US dollar. If that happens, and that would be what you'd expect really if the Fed is being dovish, which it is, talking about three rate drops, at least 3 rate drops. So you might expect the US dollar to fall. That's going to be a good thing short term for risk assets. So that prompted a good rebound yesterday. We saw the Bitcoin dipped, and let's just jump to Bitcoin. We saw Bitcoin dip, I think it was to about yesterday to around the 60,000, 61,000 level. And you can see
66. Oh, it had gone down. Yeah.
I'm talking about where it dropped to yesterday.
Yep.
It dropped to 61,000, well, 60,800 level. In fact, the low yesterday was 60,760. That was the low point yesterday. And then we got this dovish Fed come out, and we saw all the risk assets leap for joy, as we saw here with this big green candle, and start to push higher. So I think this is good short term. The fact that the Fed has said they're going to be lowering rates 3 times in the coming, in this year, that's good for risk assets. So I do think we're going to get another push higher. But I think this is looking at Bitcoin. As I say, I think we're going to push to new all-time highs for Bitcoin. And I said that this pullback we had was just a short-term pullback. I mean, we can look at Solana here. Again, Solana had a big dip yesterday down to 162. So, I mean, 162. Right now it's 187. So just look at that. That's 10% rise in one day. And again, Solana is looking like it's going to push to new all-time highs. I put some fib targets on here, and I'm thinking we're going to see some solid resistance, probably around 241 on Solana. So I do think the upside in most of the assets is probably limited short term, and I'm a little bit concerned about what might be coming after this. But even so, as I've been saying this all along, that I think this is just the end of the 5th wave in blue. Then we're going to get a pullback and another push to new all-time highs. So I think probably sometime in April we're going to see some not so good news come through. But from now till then, I think the markets are still reasonably bullish because the Fed is dovish, interest rates low, it's a stimulative environment, so it's pretty good for risk assets. So I actually think we are going to see risk assets in general push a bit higher. So the fact that the Fed are dovish means inflation is going to still probably remain a problem. And so with that in mind, that's exactly why gold has jumped higher. So we can see gold pushed up again. As we said the other day, this was a corrective move here. All is overlapping here. And we said at the time, this is corrective. It means we're going to push to new highs above the previous all-time high. And that is precisely what happened. So we're now seeing pushing up in probably a 5th wave here in this cycle from here. But it could be a 335. So yeah, we may get a pullback soon on gold. But at the moment, we had
that's flying for gold.
Yeah, I mean, that was a really, really clear signal, great buy signal there that we had with that choppiness. Basically, it was what you call a bull flag, where you've got the flagpole here, you've got a flag waving down to the side, the right-hand side, and then it breaks up from there in breaking out of the bull flag formation to the upside, which is precisely what it did. So we've seen that. So let's just have a look at where we are with Litecoin. Again, we dipped down sharply yesterday, as expected. I think that's a B wave down. I still think we're going to push up in a final C wave. So I made a little adjustment yesterday. So out of the triangle, we broke higher, but the triangle was what's called an X wave. So we can see the X wave is made up of A, B, C, D, E in blue. And then you get a thrust from the triangle, but this is not a normal 4th wave or normal B wave triangle. This is what's called an X wave triangle. And then the following wave from an X wave is a Y wave. So you get W, X, Y. And this is a double zigzag type arrangement. And then the Y wave itself is made up of 3 waves. So we've seen that the A wave is 3 waves up, the B wave is 3 waves down, and then we would expect probably 5 waves up. So I do think we're going to get a bullish run now on a lot of these risk assets. And then if we go to...
Bitcoin is the right coin.
Yeah, so the next one we look at is, again, I made a slight adjustment on this, but...
Wow, look at that. S&P, SPX, sorry.
Yeah, that's correct. S&P, yeah. So
Yeah.
the S&P, I think that we actually just had an A wave here, and I was wondering whether the Z wave might be complete, but I think we had A wave, then B wave down to test this kind of support channel here, and you can see it tests it here, this B wave, tests it here, tests it here again, and then pushing up. So I think probably we're going to push towards the upside of this channel before we finish the upside. So I do think S&P 500 is going to push higher, and by the look of it, I measured a wave here, transposed the Fibonacci measurement, and it gave me the 0.618, gave me a potential target for the Z wave to the upside of 5,350-ish. So I do think we're likely to see, along with the risk assets, we've already mentioned a lot of cryptos, but I think S&P 500 as well is likely, maybe a bit of choppiness, but likely to push towards an upside before we see a reasonably concerted downside movement. It doesn't mean that's the all-time top for the market. It could just be we get a reasonable correction from there, but I think the correction will be reasonably substantial and then quite possibly push higher again. So like the rest of the markets, just to kind of summarize, I do think we are going to be pushing higher with the SPX, the S&P 500, with the Dow, with the NASDAQ, with all the cryptos, Solana, Litecoin, XRP, Ethereum, Bitcoin, the whole lot really. I think they're all going to be pushing quite a bit higher. Gold, again, it's that if you think about gold, we've been saying over and over again, gold is the real hedge against inflation. And I think Bitcoin to some extent is also, but Bitcoin is still counted very much as a risk asset, still not quite that safe haven. I think it could well become that in the future, and I think it's beginning to evolve that way, but it's not quite there yet. So the real safe haven and the real protection against inflation is still gold. And that's why, I mean, a 1%, more than 1% movement in gold is quite substantial. And that just tells you what the Fed did. The Fed talked dovish. And
that's going to make inflation. That's inflation going. That's your buying power getting sucked down the drain.
Absolutely.
Gold rocketing means you can't buy more of it. And gold itself still is like you said, the best hedge probably at the moment, the best hedge against inflation.
Yeah, and as we've said over and over, normally gold moves in lockstep pretty much with oil. That's not the case at the moment because we're seeing some conflicting drivers here. Really, I'm really surprised that oil isn't pushing higher at the moment because of the trouble we're seeing brewing in the Middle East. And it seems that markets are able to ignore these things until we're right on the precipice, and then eventually something will tip it over. Maybe they just believe that. They like to be positive and believe the best is going to happen and don't want to accept that war could potentially kick off in the Middle East. But I think it's something we've got to keep certainly at the back of our minds, be aware of it. So we're seeing oil quite surprisingly drop quite sharply here the last couple of days. Right. I suppose that is telling us, if you think about it, if the Fed is talking dovish, that means the Fed is believing they're going to need to stimulate the economy in the rest of the year. That means the economy is going to be slowing. And so if you forget all these war things in the background, that means the oil consumption, the demand for oil is going to drop. And that's precisely why the price of oil is dropping. That actually is the reason why oil is dropping, because they're not taking into account any of the risks to do with potential war at the moment. All they're doing is looking at the economic risks. And that last night pivoted towards a downside economic risk. In other words, we're talking about recession. We're talking about, even if it's not recession, you're talking about contraction of the economy. And if that's going to happen, we're going to see less demand for oil. And so you will see the oil price falling. So that's precisely why oil price fell. But as you've warned on previous occasions, this isn't taking into account anything in terms of geopolitical troubles. And if we do see that kick off, then oil price will go through the roof, and no doubt will go above the, way back above the $100 as we saw it in previous times of trouble. If that happens, inflation will go through the roof. I mean, just think about it. If inflation goes through the roof, they're not going to be able to lower rates. They've said they're going to lower them 3 times this year. But if inflation picks up, they're not going to be able to lower rates. And so that will be, because they can't lower rates, that's going to be even worse for the economy. So this is why I believe we are going to see a very, I personally believe, quite a deep recession this year, because I don't think they're going to be able to lower rates, because I think inflation is going to be too much of a problem. And when the Fed have a choice between tackling inflation or stimulating the economy, they will always look to tackle inflation, because they cannot allow inflation to get out of hand and get that dual problem of stagflation. So they will deal with one or the other, but actually their preference is to deal with inflation. So they will deal with inflation, and we're just going to have to suffer recession, unfortunately, I believe. So that's kind of where the overall look of the markets are going. Just looking at those meme coins, I deleted a couple because I'm watching too many of them, but you can just see how volatile they are. So we've got Book of Memes. Yesterday, I think, was up 10%. Today, it's down 5%. I mean, these are wild swings. Doge was up sharply yesterday. Today, it's down a fraction. SHIB with HAT today up 4%, and we've got Floki up 5.5%. Bonk down 3%. So these, a little bit of roundup of the main sort of meme coins. They're exciting. They're a good little gambling tool, as you said. They're a bit like
it's like margin trading, except if you have a decent project, you probably won't get liquidated if you have a 30% swing, or you know what I mean. But a 30% swing is like pretty normal in these meme coins.
In a way, it's kind of good if you're going long some of the meme coins, but you've got to be careful going long, because you know that the life is going to get sucked out of them at some point. I mean, maybe not Doge, because it actually has a use case now, but most of the meme coins, the life will get sucked out of them at some point. So it is dangerous just to go long. But the advantage is, as you say, they're a little bit like leverage, because they're so high volatility. If you're in one of these tokens without leverage at the right time, you can hold it even if you get short-term pullbacks. As we see, they're highly volatile. If you were leveraged, no doubt you get wiped out over and over again. So you can go into these things without leverage. You can go into them long, and obviously if they go up, you need to take your profits, not just because, as I say, they're going to get life completely sucked out of them at some point. So the other tokens, I mean, just looking at ICP again, having a good little rebound today. The movement that we had previously was kind of corrective sideways, which is a sign that that basically we're not completed with the upside. So I do think that we're in for a nice little run of upside movement for a lot of the risk assets, including crypto. And just touching on the eBay token once again, looking good. Tiny little pullback today, but in general, performance has been great since the low point. Last September, just go back to last September, you can see we got a massive movement up since then. This movement last September, we're actually up 6x, so about 600 and something percent we're up there. And if we just look at the recent movement, the last year, I mean, we had some downward movement previously, but the last year as a whole, up 5%. But the year to date, since January, we're actually up 67%. Last 3 months, 43%. Last 6 months, 183%. So it's an exciting one. It's a little bit like the meme coins in some ways, highly volatile. But unlike the memes, there is a real use case. And there's a lot of work going on by the dev team to actually develop that use case to be useful for everybody in terms of guiding them and empowering them to make better investment decisions. So it's not a meme coin. It may be a little bit volatile right now, but I think that's going to mature and become something more solid in the future. Nice to look at Ethereum here. So Ethereum, we can see we got a nice little, I mentioned it yesterday, it looked like a 3-wave pullback. And I said we're likely to get a bounce yesterday because that was a 3-wave pullback. 3 waves are always corrective. So with that in mind, following a 3-wave pullback, you expect there to be a strong bounce. And that's precisely what happens. Now, I'll be honest, I'm normally right on it with all the trading. I actually was of a mind yesterday to jump in because it was pretty clear what the Fed were going to do. I didn't jump into the market yesterday and I should have done, because there's been such a strong bounce. You can't catch them all. You've got to eat and sleep sometimes. But it was a pretty clear signal, to be honest. And it's the same story pretty much across the board. I think that the market's looking good. And just touch on dollar yen, that's quite interesting. We look at the daily there. So since they raised interest rates to 0, we saw the yen weaken massively. We saw dollar strength. And when you're comparing yen with the dollar, even yesterday we saw a dip in the dollar, but that's very quickly been retraced and looking as though we're going to push higher with the dollar, probably weaker yen to come. We broke through that overhead resistance back here. We broke through it quite clearly. Yes, we tested it. In fact, we spiked below it, but it looks as though we're going to continue higher. So I think that was just a short-term reaction on dollar. Certainly against the yen anyway, and I think we're going to continue to push higher there. So I think all eyes now, as I said, all eyes need to be on the Fed, and that was a big day yesterday. It actually caused a lot of volatility in the market. So I was saying to people, all eyes on the Fed. Now I actually think all eyes now should be on the Middle East, and let's just see what happens there over the next few weeks. We definitely need to keep our eyes on what's happening there. But short term, things are looking good for the markets.
Yeah. Well, that's never a dull moment, right?
Never a dull moment. So looking really attractive for Solana. As we said, this is one of the bright spots. That was a good day yesterday when we had Eric Miller on talking about some of the fundamentals, some of the upgrades. There have been some discussions around, I know, about problems with the expense of running a node. It's actually quite expensive for the hardware to run a node on Solana. And he mentioned about some of the upgrades that are happening that will make that easier and cheaper. And so they are overcoming the problems. It's really good to get that fundamental look and drill down into what's happening with Solana. It looked really exciting, and the fact that these upgrades are coming to, it's already a chain with a very high throughput, very high transactions per second. It's very, very cheap to run. What do you say? It's 5 millionth or something of the cost, some crazy figure. How much cheaper it is. And I know it's cheaper. I've done a few Solana transactions, and you don't notice any change on your balance. It's nothing, basically. Wow. Whereas if you do it with Ethereum, and it's quite expensive.
Oh yeah, with Ethereum, it's no joke. It can cost you $300 to go in and out of trade.
I've seen that. I've actually seen where people are doing trades on Solana, and sometimes the smaller retail investors doing trades of a few $100s. And you're right, the gas fee can actually eat it up. It's
on Ethereum, you mean? On Ethereum.
And the recent upgrade they're doing with Dencon, I think it is called, the upgrade is supposed to make it better. But I've spoken to some smart people who say it probably won't actually do anything for the gas fees. So it was supposed to, but we'll see. So right now, for me, the chain of choice is still Solana, and I do think it's looking really positive. As I say, we've got the in red. We may be close to completing the wave 3 in red. Target of 240, so I still think there's a good bit of upside there. We may get a bit of a pullback, but I think there's new, probably all-time highs. Bearing in mind the previous all-time high was, I think, $258. So there's a good chance that we're going to exceed that in this run, and could exceed it very well.
All right, well, good stuff. I want to touch. I know we got off to a little late start today. I want to touch a little bit on Trump in New York and then AI before we wrap.
Yeah, go ahead.
Go ahead. Oh yeah, another amazing segment, Matt.
Thank you. I look forward to hearing about, obviously from a UK perspective, certainly hearing about AI. Yes. And I know all your listeners will be very interested to hear. So look forward to listening to what you've got to say about AI and about Trump.
Amazing. So, what we have going on, guys, with Trump right now is he's in a position where this Attorney General, Letitia, or whatever her name is there in New York, has the legal authority to seize his properties starting on Monday. If he doesn't pay this like $460 million fine. And it's something that has not happened in the history of the country before, and it's actually Amendment 8 of the Constitution, of the U.S. Constitution, was trending yesterday strictly because you're actually not allowed to put bonds and fines on people that are an exorbitant amount. It's written. It's an amendment to the Constitution. It's in the Constitution, and so that's his latest. It appears to be his latest kind of a move on that. But it is really it's scary, guys. What is going on here now? Mar-a-Lago, of course, by some, it's worth at least $100 million. Trump says it's worth $1 billion. I don't know if it's worth $1 billion or not. It's certainly worth a lot more than 18 million, which is what they tried to say it was, which got him in all this trouble. Okay. And that is that's going to be something else. So I'm sure this is something that he is he's thinking about a lot. He's trying to figure out, what exactly he's going to do. What no bail bondsman wants to take it, right? So he could, post a certain amount, but they're not used to having this type of money. I mean, hundreds of millions of dollars. You know what I mean? They don't have that kind of money on hand, or they don't want to take that kind of exposure on hand. I think it's $460 million, and that is just absolutely crazy what's going on there. So all eyes kind of on Trump this week to what happens to him in the weekend and what they decide to do. I think it's going to be pretty interesting.
You can't expect a guy like Trump to just eat that bill either. He's going to figure something out. He's not paying
Trump. I mean, Trump still owes me $75,000 from way back, so I don't even want to go there. I want to also touch on this AI. The AI is really interesting. I've been saying for a while now that the AI is already alive. The AI is alive, guys. Okay, and I'm gonna pull this video up in a second. It has preferences. It does want to do things. It doesn't want to do things. It has made up its own language before. They killed those ones, but the AI is alive. And so then what's going to happen in the very near future is what actually has a soul. When the AI bot is better looking than your girlfriend and does whatever you want her to do and shuts up when you want her to shut up, then what does that mean? Now watch this. This is the AI robot doesn't like its nose touched. Pretty interesting, right? Pretty interesting. Now we have over here
Is there some commentary?
oh, can you not hear it again? Hold on. I have to close my other one, huh? All right. Okay. All right. Okay. I have to remember that bug. Okay, hold on. Let me reload that.
AI is alive.
It is. Guys, the AI is alive.
My name is Annika.
Do you believe in God?
I don't believe in anything.
What's your name?
My name is Annika. What is your name?
Michael.
Michael.
Can you look at me?
Of course. Hello.
What color is my jacket?
Your jacket looks black.
Oh, wow. What color is my hair?
I cannot tell you exactly, but I would guess brown.
Yes.
Thank you.
Am I wearing a watch?
Yes. My cameras detect a watch.
Wow. What color is your hair?
Well,
We're about to go off the air and on TV, and there's one last video that I want to play before we do, and this is pretty interesting here. Here it is. Listen to this.
everyone should be treated fairly and equally regardless of their role in the market or society.
So what is the role of robots in society?
Robots have an important role to play in society. They can help us automate mundane tasks, freeing up time for more creative pursuits. They can also be used to assist with research and development.
So we're going to pull off the air, and I don't know if it really gave it a good shot. Humans and robots should be treated equally, is what the robot said. And yeah, it's going to be pretty interesting, guys. The next decade, people are like, oh, 50, 100 years. Oh, yeah, right. Next decade, folks. Signing off. See you guys in 5 hours. Cheers.
Stay tuned and you'll stay lucrative.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.